Today, we're going to dig in and talk about how to chart like a pro. You're going to learn all about what those squiggly lines mean. You're going to learn how to set up your own chart so that you can figure out the best time to buy and sell. Okay, I'm going to tell you exactly what to look for. So don't worry, I'm going to break it down in simple terms. If you enjoyed yesterday, you're going to enjoy today, and you're going to be surprised that you understand what all of that stuff means, okay? You're going to be surprised. So remember, I am going to be strictly lesson here in the beginning so everyone can take notes and we don't drag on any longer than we need to, because I guarantee you I will probably answer the majority of your questions during the lesson. And then at the end, I will jump into Q&A and answer some questions. So admin is going to be monitoring the chat and looking at the questions that you have. They're going to bring those to my attention. So at the end, I can cover some of those, okay? All right. Jay says she's ready. Paulette is in the house and Jackie is here as well. So what I'm going to do is share my screen. We're going to be looking at Yahoo Finance for this lesson today. Now, I picked Yahoo Finance as the tool for today because it has a low barrier of entry. You don't have to sign up for an account. You can just go straight there. So if you don't already have an account set up, then this is a great place for you. If you do have an account set up, you can follow these same instructions in your app or platform of choice to set up your charts, okay? There were also some resources linked in today's worksheets that talk about how to set up your chart in a couple of the other apps or platforms if you prefer to use one of those. The fact that there are so many apps out there, I can't dive into all of those apps in the 5 days that we have to show you how to do them in all of them. But the gist of it is all the same, okay? You're going to find your chart settings and you're going to set them up according to this. Then at the end of your worksheets, there's also the same settings I'm going to show you how to do in Yahoo Finance. They're going to be at the end. So at the end of the lesson today, you will be able to go into Yahoo Finance or your platform of choice and set up your charts as well. And that's going to be your homework assignment, is to set it up. Come share it with us so that we can give you feedback and help you get corrected if you need it, and to test your knowledge. Because when you apply what you're learning, it sticks a lot better, okay? So that is how it's going to work. If you've noticed from yesterday, it is a lot about I teach and then you go and apply so that it sticks and that you get it, all right? All right, cool. I'm going to share my screen now and we're going to hop into Yahoo Finance. All right. Actually, let me slow my roll here for a second. Let me slow my roll. Your worksheets actually start with this, huh? We're talking about candlesticks, huh? Your worksheets start with candlesticks. So let me slow my roll and get myself together here, okay? Let me talk to you about candlesticks first before we jump into the chart. This is the beginning before we break down that chart. Now, a candlestick, you have a picture of candlestick in your worksheets, and we're going to break down what that means. But a candlestick represents the price changes or movement of your stock, okay? It represents the price changes or movement of your stock during a certain time frame, okay? So each candle, they look like little candlesticks. Each one of those represents a certain time frame. And so it also represents the way your stock's price changed during that time frame, okay? So I'm going to show you the picture of the candlestick, and we are going to break that down. Let's see, candlesticks. Here we go. Pull that up on the screen here, and we're going to break down these candlesticks on what each one. So make sure you have your worksheet or you're taking notes, because we're going to fill in those blanks that you see on your worksheet. So if you see those empty spots, we're going to fill those in right now with what they mean. All right. Put this down and this down. Okay. All right. Let me know that you can see my candlesticks. Can you see my candlesticks here? We got this going. Blow this up for you so you can see. There we go. All right, candlesticks. We're going to start over here on, we're going to start down the middle here. Okay, so what you have here in the middle, you have a white candle on the right and a red candle on, a white candle on your left and a red candle on your right. Okay, left is the white candle, right is the red candle. In that middle section, the white and red blocks are your candlestick bodies. Okay, those are your candlestick bodies. All right, then you see how each one of those look like a candlestick here, just like if you've ever lit a candle. What is lit? If you've ever lit a candle at your house, that's exactly, it looks very similar to this. So that's where they got their name from. That's why they're called candlesticks. Okay, so this whole solid area, this white area and this red area is the candlestick body. All right, and then at the top and bottom you have like those little sticks sticking out. It's called a wick, just like on an actual candle. Those sticking out are called wicks, okay? And this whole thing represents how your stock's price changed over a certain period of time. And we'll get into what period of time and all of that, okay? Okay. So a white candle, the way we have you set it up, sometimes you'll see that they're greens, but I set them up as white. If you want to set them up as green, that works for you. That's okay. All right. But the white candlestick means that the stock price went up for that time period. Okay. The stock price went up for that time period. Then the red candlestick means that the stock price went down for that period. Okay. The stock price went down for that time frame. Starting with this white candle, we are going to break down what the different areas of it means and what it's telling you about the stock's price, okay? So the top of the candlestick here, the top of the block right here on the white candlestick, that is the closing trade. Okay, that's the highest, not the highest price, but that's the price that, remember yesterday we looked at the closing price? At the very end of the day, this where the top area of the candle is, that is the last price of the day that a sale transaction happened. So someone says, give me that Walmart stock at $20, and someone else says, yes, I'll give it to you for $20. Their buy sell transaction happened right there at the end of the day. That's what the top of the white candle means. Okay, the last price of the day. The very top of this wick here, the very tip of it, represents how high the stock price went for the day, okay? How high the stock price went for the day. So it went as high as the top of this wick. Say this is like $25 up here. So the last price of the day was $20, but it went as high as $25, okay? The top here, the closing price, it closed for the day. Last transaction for the day was $20. And it went as high as $25, the top of this wick. Now, again, the 20, 25, I'm just using as examples, okay? Now, the bottom of the candlestick body, this very bottom line here, represents the opening price for the day, okay? The opening price for the day. Now, if this is blurry for you, make sure maybe you refresh, make sure you check your Wi-Fi, but make sure you're checking that, okay? All right, so the bottom here of the body is the opening price, the very first buy and sell transaction for the day, all right? The very first transaction. So the market opened for the day at 9:30 Eastern time, 6:30 Pacific time, and someone says, I want to buy at $18. Someone says, okay, I'll sell for you at $18. So this is the very first price of the day. And then it went as high as the top of the body here. As high as the top of the wick. And then it closed here at the top of the candlestick body. Okay. So very first price of the day is right here. Very highest price of the day is up here. And then the last price of the day is right here. Okay. But again, the very first price of the day is right here. the highest price of the day is up top at the top of the wick. And then the very last price of the day is down here. Okay, the very top of the body. Now, the lowest the price went for the day is going to be the bottom of the wick. This is the lowest price that it went. All right. So again, very first price of the day, very first sell of the day is here at the bottom of the candlestick body. It went as high as the very top wick. It went as low as the bottom wick. And then it closed here at the top of the body. Okay. Let me know if this is making sense for you guys. But this is representing that the stock price went up for the day. Remember, the stock's prices throughout the day are not going in one direction. Sometimes they're up here and then they're down here, and then maybe they went all the way down here, and then another minute they're up here and then they're up here. Like, they change throughout the day. But this whole candlestick body is going to represent that price movement throughout the day. All right. So that is what it looks like for an up price. Again, you can make this candle green if that makes more sense for you than white. But whatever you need to represent that this is the price going up, okay? Now on the right side, we have the red candlestick that represents the stock price going down. So let's start on that one, okay? The top of the red candlestick body is the opening price for the day. So that is the very first buy and sell transaction for the day, is right here at the top of the candlestick body, okay? And then we have the highest it went for the day is going to be at the top of the wick. You'll see that this is reverse, or the opposite of the white candle, okay? So the highest price is going to be at the top of the wick. Then the lowest price, the closing price of the day is going to be at the bottom of the wick. And then let me get my mouse moving. Okay. And then the lowest price is going to be at the bottom of the wick. You see that it's the reverse of the candle body, is the reverse of the white candle, because it's going down in price. So it starts at the top of the candlestick body and it goes down in price. And it represents that the stock started high for the day or for the week or for the month, and then it went lower from there, okay? So again, the white candle means the stock price went up, and the red candle means that the stock price went down, all right? Make sure you're filling in these notes in your worksheets, all right? Awesome. So now that we've gotten the candlesticks broken down, I wanted to go over those components first because they are going to be on our charts. And once we know that part, then we can break down the rest of this that is happening, okay? All right. So now we jump into the chart. I was getting a little excited. I told you guys this is like my favorite part. The charts, like when you see what you can see on these, oh, it's going to be amazing. You're like, what? Okay, so we are going to work on, I'm going to show you now how to set up your chart, and then we're going to break down the elements that are on the actual chart, okay? Then we're going to break those down. Got to get my Yahoo Finance back up. There we go. I got Yahoo Finance back up over here. All right, where can I move me out of the way? Yeah. I'm hoping I'm not in the way of this here. Give me just a moment, because I see my little window over here on the right. So I'm gonna move over here and see if that helps, so that I'm not blocking anything. Okay, so when you go to Yahoo Finance, again, you're going to type in finance.yahoo.com. Finance.yahoo.com. Unfortunately, this is not, you're not going to be able to see the chart feature on a mobile phone. If you're, like, you'll be able to see what I'm showing you here in the video. But if you go to set up your chart, I don't believe it shows on the mobile, on your web browser on a phone, okay? So you might want to double check this if you're trying to do that, all right? Okay. once you're on Yahoo Finance, finance.yahoo.com, you want to go up here and type in one of your stock symbols. So you made your watch list yesterday. You want to type in one of your stock symbols from your watch list. All right. So I'm just going to select Johnson & Johnson since it's up here on the screen. Okay. All right. So now that we have Yahoo Finance pulled up, once you have it pulled up, what you're going to see on the screen across the top area here, what you're going to see is that market crowd. Remember we talked about that market crowd? That's the same market crowd that we talked about yesterday. This right here, that ticker what, ticker who? Yes, that is the same market crowd, and you're going to see that right here across the top, okay? You've got the S&P, the Dow, and the NASDAQ. So that's just a quick glance of what your crowd is doing, okay? Then just under that, you're going to see the stock symbol's name the stock name and the stock symbol, okay? Remember, the stock symbol is just a couple of letters that represent the company, all right? Then you're going to see the stock's price right here. And then next to the stock's price, you're going to see the same information that you see for your market crowd. So you're going to see how much the stock price changed dollar-wise and percentage-wise, right? And then usually at the end of the day, you're going to see a after hours. So that's just some people are allowed to trade after business hours, and so they will reflect how that trading is happening, okay? As you can see here, Johnson & Johnson is up $4.08 since after business hours, okay? After hours. So that's what that means there, okay? All right, and then down here, you're going to see a couple of options across the top. What you're going to want to select is chart. Go ahead and select chart. And it's going to pull up the chart screen for you. All right, it's going to pull up the chart screen for you. I wish I could move this, make this smaller. Give me just a second. Moving myself out of the way here. Okay, so now that you have the chart screen up, what you want to do is, let me go over some things that are up here. Right across the top here, you're going to have indicators. We're going to jump into those in just a second. That's how we're going to set up your chart. Then you're going to have an option that says comparison. That comparison just allows you to look at compare two different stocks, okay? Then next to that, you're going to have a date range. And what you can do is change the date range of what you're showing on the chart. So we have August 1st, 2019 to October 30th, 2019. And if I click apply, this whole area here is now August 1st over here to the far left, and we've got October 30th all the way over here to the far right, okay? So that just allowed me to change how much I'm viewing, all right? You also have other options here, like maybe you only wanted to see 1 day worth of time, okay? Maybe you wanted to see 5 days. That's the 5D. 1M is 1 month. 3M is 3 months, okay? So that's what all of this means up here. What I like to do is have it on at least 1Y or 1 year, because I want to kind of see what it's been doing for a little while, okay? So I will usually default it to 1 year, okay? Then over here, you're going to have an interval, all right? So you can select, again, like how much do you see? Do you see 5 minutes? A 5-minute chart, or do you see 30 minutes? All right, but I'm going to switch it back to 1 year. Then right here where it says line, what you want to do is select the line, select that drop down, and you want to change it to candle. Okay, change it to candle, and now it's starting to look like what we know. Okay, what we just went over. So I'm going to zoom in here just a little bit. You can zoom in using the plus signs down here at the bottom. But you see those candlesticks? All right, they're red and green here because that's what they use. But I know we showed you a white and a red. Remember, white or green represents the same. Okay, white and green are the same, and then you have your red candle. So this green one means the stock price started at the bottom and it went all the way up. All right, the red candle means it started here at the top and it went all the way down. Okay. Remember, we just covered what all of that means. And then you can see wicks here, a top wick. You see a bottom wick here. That's what all of that means. That's where all of that is on your chart, okay? All right. So now that you have your candlesticks showing, there are a few other elements that I want you to add to your chart that are really going to help you see and understand what your stocks are doing next, or what they could potentially do next, okay? Could potentially do next. So we're going to go over here to on the left where it says indicators, and you're going to click on the indicators, okay? You're going to click on indicators. You want to select moving average, okay? You want to select moving average, all right? And then you want to put in 50, so 50. Make sure you select 50. Don't change any, you don't need to change any of these, but then you're going to come down and change the color to orange, okay? Change the color to orange, and then click save, and it's going to add an orange line onto your chart. We're going to go over exactly what that orange line means and how to understand it. Go back to indicators, select moving average again. Then I want you to put in 200, 200. Change the color to black, and then click saves. Okay, I said saves. I meant save. All right. So now at this point, you should have your candlesticks on your chart. You should also have an orange line on your chart. And then you should also have a black line on your chart as well. Okay, a black line on your chart. So we should be looking like this right about now. Then what I want you to do is click back on indicators. We're going to add one more thing to our charts, okay? We're going to add one more thing to our charts. Once you've clicked on indicators, I want you to go down to Bollinger Bands. Click on Bollinger Bands, okay? Once you have that open, what you're going to want to do is at the top, make sure it says close. The period needs to be 20. Standard deviation is going to be 2. And then you want to turn this off. This channel fill, you can turn it off, deselect it so it's not blue, it's grayed out. All right. And it's where it says Bollinger Bands top. You're going to click on that and change it to a dark blue. Where it says Bollinger Bands median, you're going to click on that, change it to a light blue. Okay. Bollinger Bands bottom, you're going to click on that and change it to a dark blue. Then you're going to click save, okay? Then you're going to click save. Again, this is all under the indicators here. If right here on the left side top of the chart, you're going to see this button that says indicators. That's where you're going to click and be able to select those options, okay? So we've added 3 things to this chart. 4 things. We've got our candlesticks. We've got this. We've got our candlesticks. We've got this orange line. We've got this black line, and we just added these blue lines. Okay, we just added these blue lines. All right. All right. So now we are going to break down what these mean. We're going to break down what all these lines mean and what's going on with your stock when you look at it, okay? So what I'm going to do, I'm going to pop back into the worksheet that you have because you have those areas that you fill in, okay? Yes, you should have 2 dark blues, all right? So we're going to go over these here in just a second. Let me pull up my chart that looks just like the one that you have in your worksheet, okay? So you should have this in your worksheets. So we're going to fill in the blanks here on what these lines are, and then we'll go over what they mean and how to read them, okay, for buying and selling, okay? All right, so the first thing we're going to go over here is the blue lines. So yes, when we added the Bollinger Bands, we added 3 blue lines. This top blue line that you see around the top is going to be your top Bollinger Band, all right? Your top Bollinger Band. Then in the middle there, I should have just said Bollinger Bands, I'm sorry. So Bollinger Bands are the blue ones. So across the top, you have your top Bollinger Band. In the middle, that light blue line that you have running through the middle is your middle Bollinger Band, okay? Your middle Bollinger Band. And then the bottom blue line right here is going to be your bottom Bollinger Band. Your bottom Bollinger Band, okay? Then you have, let me back up. So the Bollinger Bands, the three blue lines, I like to look at them as a river, okay? Or water, a river, a body of water, a river, okay? And your candlesticks are like fish in that river, okay? They're like fish in that river. And just like in real life, fish cannot survive outside of water. All right. Fish can't survive outside of water. You will see them maybe jump out, have a good time, jump back in, and all of that stuff. But what you won't see is that they jump out, they run around on the beach, they have a good time, they come, you're not going to see all that, right? They're going to pop out and they're going to pop back in. If they pop out and they land on the riverbed or anything like that or outside, they can't breathe, they can't survive. So they will try to get back in. Your candlesticks are the same way, okay? Your candlesticks are the same way. As you'll see right here, I'm going to zoom in a little bit. Right here on the left side of your chart, this red candle popped out right here on the left bottom side of your chart. These candlesticks kind of popped outside of that water, but as you can see, it went right back in. The next two candles, they went right back in. Because these are fish and they cannot survive outside of that water, okay? So they may pop out for a little bit, but they pop right back in, okay? As you can see here, it kind of peaked out up here at the top, kind of peaked out, and it popped right back in. Again, over here, these green ones peaked out, and then they popped back in. Give me just a second, okay? Peaked out and jumped back in. Over here, this red one, its wick came all the way up, peaked out, and then it came all the way back in and closed at the bottom of that red candle. The price went up outside of that band, and the fish was like, nope, I can't survive out here, and it comes right back in, all right? You'll see it down here as well. Popped out, went back in, all right? Up here, kind of peaked out, and it went back in. So if you're ever wondering, like, well, is my stock going to keep going up, right? If you see it's pushing up against this the top Bollinger Band, the fish is hanging outside the top of that river, there's a really good chance that it has to come back in. Don't buy for that stock to go up if it's hanging outside of the river. It can't survive. It has to come back in, okay? So wait and allow it to come back in and get some room to where it could go back up some more. Do you see? So right here it popped out. This wouldn't be a good time to buy because the fish can't survive outside that water. And so it's going to come back in, get some room, get some breath, and then start going back up. Okay. That is what that means. All right. So that's what you want to pay attention to. Same thing for going down. A lot of people are like, stocks are going down. When's a good time to buy? Well, if it hits that bottom Bollinger Band hanging outside of the bottom of that river, it can't go much, I'm not going to say it can't, right? Because some do go much lower, but it's a high chance that it can't go much lower than that, or it won't go much lower than that, and it'll start to come back into the Bollinger Band, okay? It'll start to come back into that river because that fish can't survive outside of water, okay? So that's what the Bollinger Bands are representing. They're like a high boundary and a low boundary for your stocks, for your stock price, for those candlesticks, okay? All right, so the next thing we're going to look at is going to be that orange line that we set up. That orange line is called a 50 moving average. That's the technical name for it. We don't like technical around here, okay? We're going to break it down. You can call it the 50, you can call it the orange line, but the easiest way to think of this line is to think of it like an army, okay? An army. You can think of it as an army of sharks because we're in the river. I always say army men, and one day one of the students are like, "Well, why are the army men in the water?" Right? So if you want to think of it like an army of sharks that are gonna attack your fish or or something like that, you can definitely think of that. But it is like an army of men. And why do I say that? Because if your candlesticks start to reach this orange line, it's like they're fighting this army. So your fish are fighting the army of sharks, okay? So right here, I'm going to zoom into right here on your chart where you can see the candles started to hit that orange line, all right? It started to hit that orange line, and the wick, the top price hit the orange line and it came back down. So it started fighting with that army right there. The orange line is the army. And then it started backing up. It was like, okay, we're not going to win this fight. Your fish was like, I'm not going to win this fight. Right? Here it again. It hit and it was like, okay, I'm not going to win this fight. And it came back. But then it formed this green candle. The price started to make this green candle and it broke through that army. Okay, so the fish was able to break through. So I'm not saying that it will hit there and never go through it. It can. Sometimes it'll touch a couple of times. Think about an army attacking and retreating and attacking and retreating, and it has made the other side very weak. And finally, it's able to break through. All right. Finally, it's able to break through. So whenever you see your candlesticks or your fish starting to reach this orange line, you want to think to yourself, okay, this orange line might be some resistance. So if I think my stock is if I want my stock to go up right here, so say you wanted your stock to go up and you see it reaching that orange line, okay, you see it reaching this orange line, you can say, okay, here's an area of resistance. Here's this army of sharks that are probably going to give my little fish a hard time. So I might have a hard time going much higher than that orange line. I might have a hard time going much higher than this army of sharks here, okay? So remember that as you're watching these candles start to form onto the chart, that is what could potentially happen, okay, as they get close to these lines. The other line on your chart is going to be your black line, okay? That black line is called the 200 moving average. That's the technical name. Remember, we don't like technical around here. We want to keep it simple. So you can either call it the 200 or the black line, okay? And just like the orange line, the black line is an army of sharks, okay? But it represents an army of 200 sharks. All right, so your orange line represents an army of 50 sharks, and your black line represents an army of 200 sharks. All right, 200 sharks. So if your candlestick starts to come close to that black line, you know, okay, here's an army of 200 sharks that my little fish is going to have to swim through. Your fish might have a better chance, an easier time fighting 50 sharks versus 200 sharks, okay? Your fish, because there's fewer to fight. Like I could probably, I might get beat up, but I might find it easier to fight 50 people than fighting 200 people, okay? Where your candlestick, your little fish feels the same way about that 50 line and that 200 line. It might be easy to break through the orange line, but it may have a harder time breaking through the black line, okay? So let's take a look at right here on the left part of your chart. As you can see, your candlestick started to go up. They kind of hit that black line, and then it started to back away from the black line. It was like, oh, I'm not trying to mess with those 200 sharks right there. That black line, I'm not trying to mess with that. And it backed up a little bit. It got a little courage and said, you know what, maybe I can. And it was able to break through, as you can see here, okay? All right. So if you see your candlestick starting to reach some of these lines, then you know whether it's going to be some what we call support or resistance. Is it going to help or is it going to hurt? Okay, because the sharks can help you as well. If you want your stock to go up, if you want your stock to go up, you want these lines to be underneath your fish, underneath your candles, okay? All right, so that it can push it up. So these candlesticks right here, they're below that black line. They're going to have a hard time going up because the black line, the 200 sharks, are in the way of it going up. All right, trying to go up, it's in the way. But once it broke through the 200, now this black line, now that the candlesticks have broken through, this black line is now an area of support. The black line is now pushing the stocks up, okay? Now you've got the sharks are on your little fish's side, okay? So now it's like backing it up, and it helps push it up. So if you want your stock price to go up and these lines are beneath it like this, you are getting support. It's pushing it up. But if your stock is going down and you have these below, so the right here, the stock is going down, these are now going to help keep the stock up, all right? Because they can't go much further. So think of it like either a floor or a ceiling, maybe another way to think of it as you see these lines. As these candles start to drop down, this is now a floor. The orange line is a floor. That bottom Bollinger Band is a floor, okay? Right? But as these candles start to go back up, the ones down here that are under the black line and the orange line, now that black line is a ceiling. You see how this one came up and hit the ceiling? Okay, it backed away and then it came back up and broke through the ceiling. But now it has the orange line that it has to get through as a ceiling as well, okay? So you can think of these either as, you know, your fish in your water and your fish and sharks in the water, or you can think of them like a floor in a ceiling. Whether these lines help your stock go up or whether they help your stock go down depends on where they are located in relation to your candlestick. So right here, these candles on your far right, the orange line and the black line are below these candles. So they will help push the stock up, but they won't help push the stock down, okay? They help push the stock up, but they won't push the stock down. So they're like a floor at this point, all right? So for these candlesticks here, you know what? Let me see if I can circle. I can do a shape. Let me do a shape. Okay, so these candlesticks here, change the color. No fill. Border. Let's see, no fill. Do I still have a line? I still have a line. Let's do the line. There we go. There we go. And I'm going to make it pink, I guess. So hopefully it stands out. Okay, there we go. All right, so right here, these candlesticks here are using that. They have the orange line as a floor, and it helps push the stock price up. Okay? It helps push the stock price up. But then you have these down here. They are seeing the black line as a ceiling, okay? As they try to go up, they're hitting the ceiling. They're hitting that black line, okay? They're hitting the black line, all right? So again, these are used as are looked at as either support to help push it up or to help push it down, all right? Depending on when you want to trade. So yes, I see that this might be a little overwhelming. People are like, wait a minute. If you feel the need to watch this over and over, it's okay. All right. Again, you're learning how to drive that car. Put your seatbelt on. Stop at the red light. Do this, do that. Like we're going to take it one step at a time. Maybe it's coming into the group and saying, okay, the Bollinger Bands mean this. Okay, I got that. All right. My candlesticks mean this. Okay, I got that. All right. Take your time with breaking this down into the different pieces and then putting them together. Okay. And then putting them together. All right. So it is going to seem like, wait a minute, what does this mean? But trust me, give yourself grace and keep at it. rewind and rewatch the replay, and it will start to click, and then jump in and ask questions where you need to, and we will do that. Okay. So I'm going to show the chart one more time to go over knowing when to buy and sell. Okay. And then we'll jump into Q&A. Admin have flagged some questions for me, and then we will go into that. So I'm not going to use the, actually, yes, I'm going to stick with the chart that you have in your worksheet, because you have that right in front of you. All right. Because you have that right in front of you, and you can take notes right on that. Okay. So when do you want to buy and sell? Right now, we've talked about just buying stocks. We won't talk about options until tomorrow. All right. So today we're going to talk about if you're just buying stock. If you're just buying stock, there's only one way to make money, and that's if the stock price goes up. Okay. The only way to make money is if the stock price goes up. All right. If the stock price goes up, I'm trying to hide these. I don't know how. There we go. Make it bigger. So the only way to make money is if the stock price goes up. If you're looking at your stock chart and you see your candles doing this right here, they're going down. If you see this down movement, this is not necessarily a good time to buy, because you don't know when the stock is going to start going back up. What you want to do is wait till you start to see this curve up. Okay, you see this curve up? That's when you want to prepare to buy more shares or buy the stock, okay? But what we just learned about the fish in water, right? We've learned about the black line and the orange line, is that we now have this black line in the way. So just because the stock price, these candles are starting to head back up, doesn't necessarily mean it's a good time to buy, because we've got to wait and see, are they going to, if it's the price is going to make it through this black line. Okay. We've got to see if it's going to make it through this black line. If you do buy before it hits that black line, then know that you should be out, or look to get out, look to sell the stock as it hits this black line, because you're going to hit an area of resistance. You're hitting the ceiling, right? And it may not go much higher. So it hit that ceiling and it starts to go back down on you. That is your sign, like, okay, it hit that resistance point. So if you start to buy as the stock, these candlesticks start to head up right here, candlesticks start to head up, then you know you want to sell as it starts to hit that black line, because that is your ceiling. Once it breaks through that ceiling, though, you could buy more. You could buy more and let it head back up, but then know that you've got that top Bollinger Band. You've also got this orange line as well. Those are your key signs that you need to pay attention to as to when is it time to sell. So anytime you're getting ready to hit one of these ceilings, you want to be ready to sell, okay? You want to be ready to sell, all right? Again, as you start to see the stock pull down, or the candlesticks start to form downward or in a downward motion, that's your sign that the stock price is going down, and you might want to sell your stock. Okay, you don't want to buy. And one of the videos I had you guys watch is buy low, sell high. Okay. Buy low, sell high is BS, is what I feel like. Because people tell you, okay, the stock price is down, you should buy. You should buy right now because the stock price is down. But as you can see on this chart, this right here, okay, let me get my little pink circle back. This right here, the stock price was up right here, okay? Stock price was up right here. Hold on. So right here, the stock price was up, okay? Stock price was up. Then it started going down and down. And people are like, you should buy. The stock price is down. Well, guess what? The stock price went down, down, and down. And you know what it did? It took your money with it. Okay? So just because the stock's price has fallen doesn't mean it's time to buy, because you want to wait for it to stop falling. You see, if you had bought here when someone told you, oh, this is a low price in the stock, you should buy now. Guess what? It went lower and lower and lower and lower. And you would have been like, oh my gosh, I want to I want to get out of this. I'm losing my money. And then you would have sold, and then the stock price went up and up and up. And you would have been so upset because you're like, this buy low, sell high thing does not work. Okay. They told me to buy low and I did, and it went even lower. So that's why I don't believe in the buy low, sell high. That's why I don't believe in buying just because the stock price has dropped. What I believe in doing is looking at your stock chart and seeing when has it stopped falling and started going back up. What we want to do is we want to buy when it is low and rising. Okay? When the stock is low and starts heading back up. This is low and starting to rise. Okay? This over here, this is low and starting to rise. That's when you want to buy, when it's low and rising, not just because the stock price is fallen, because it can keep going down and going down and going down and taking your hard-earned money with it, okay? Taking your hard-earned money with it. And you don't want that, okay? We don't want you out here throwing away money, okay? All right. So that is what your chart is telling you, okay? This is what your stock chart is telling you. It's telling you when the stock can't go much higher. It's telling you when the stock price can't go much lower. It's telling you when the price and the stock is going to hit a ceiling, the black line and the orange line and those Bollinger Bands, right? And so that's what you want to look at before you buy a stock. You want to look at, is it low and rising? Am I going to hit a ceiling, the black line or the orange line? Is it hanging out of the Bollinger Band, out of the water? You want to know all of that before you buy, okay? And so say you buy, right? Say you buy. I know the question is, well, when do I sell? Okay, when do I sell? And we'll work on how to map out your trading plan and all that on Friday. But what you want to look for when it's time to sell, say you bought when it's low and rising, okay? When it's low and rising, you want to, again, look for your resistance points. Look for those ceilings that your stock might hit. Look for those sharks that it might hit, okay? And in this case, if you bought here, like I said, it's low and rising. If you bought here, you'd want to look to sell as it starts to hit that black line. Or you want to be prepared to sell. If it can't make it through that black line, you see that it's starting to back up. You're like, okay, it's time for me to sell. Take my money and go. All right. You can always get back in. I tell people all the time, like it's not your money until it is off the table. So you can be sitting there and looking at $200 in profit. But if you don't sell, it can be gone just as quick as you made it, okay? It can be gone as quick as you made it. So remember, it is not your money until it is off the table. There is 200 and some odd days of the market where you can trade and make money, and there's thousands of stocks out there. Don't try to make a fortune on one trade or on one stock, okay? Don't try to make a fortune on one trade or one stock. It's about making little bricks of money. Make your $80, your $100, your $200 and more as your account grows, and get out. Get your money and get out. Get your money and get out. That's what it's about, okay? And so when you're looking to sell, that's what you're looking for any reason to take your money off the table. And it running into this black line is a reason to take your money off the table. It running into that top Bollinger Band, the fish hanging outside the water, that is a sign to take your money off the table, okay? To sell your stock, all right? That's a sign to sell, okay? All right, let me see. Wow, sounds like a heart-pounding thrill. It can be a heart-pounding thrill if you are not if you're not using the charts and the knowledge that you're learning in this class to make an informed decision, okay? It should not be heart pounding. It should actually be kind of boring. You're like, I'm doing the same thing. I buy here, I sell there. I buy here. That's good. You want boring money, okay? Boring money is long money, okay? Somebody tweet that. Boring money is long money, and that's what you want. It's going to be repetitive. I buy when it's low and rising. I sold because it hit the ceiling, all right? I bought when it was low and rising. I sold because it started to hit that top band, that top Bollinger Band, started to hang out at the top of the water. You want it to be boring. Yes, get small wins and get out, okay? Small wins and get out. All right, you guys, I'm going to jump into questions. I know this one was a very meaty lesson. So again, if you feel the need to rewatch it, definitely do that. But we're here to help you to really get clarity on it if you need. Okay. So first question is, does the candle movement include after hours trading? Does the candle include after hours trading? So the candle does not include, the candlestick does not, but let me, some of the candles do. I'm going to share my screen again so you can see on, right here on Yahoo Finance. All right. So if you set up your chart and you have these gray areas, you see how I have these gray bars on my chart here, these gray bars. Actually, these are not. Usually if you do these longer charts don't have it. These bigger, when I say longer, I mean like a 5-day, 1 day, like these they don't have it. They don't have the after hours on these ones. Actually, yes, it does. This one does. Okay, so I clicked on 1 day, I believe. Yes, I clicked on 1 day, and the gray, not the gray areas, but if you scroll over, you'll see 3:30 p.m. I think that's my time, right? So this gray area here is after hours. All right, from like 1, I think my time 1 o'clock on is after hours, right? Or is this after hours? This isn't after hours on this one because it closed at 4. But usually it will see, if you see after 4 p.m. and most of the time it's a gray area after 4 p.m. and you can see the times down here across the bottom. And it should show the same way in all of your apps. If you're using a different app, it'll be the same way. You'll have the time stamps down here, and then after 4 p.m. So this would be after hours. I've got 3:40 p.m. Right after that, all the way till tomorrow, which is 10:30, October 30th, is the after hours time. Because there's nothing here in this space, because there's no candles or anything there, that means there is no after hours action that they're showing. This chart is also probably like 15 minutes behind, so that might be why we're not really seeing anything as well. Yahoo Finance is going to probably be the most, not the most delayed, but their information is going to be behind because they're not a true broker. But if you're in any of your investment apps, those are going to definitely show you the after hours time, the after hours pricing or candles in real time. However, we're not going to trade during after hours, okay? You're not going to trade during after hours, so you won't even need to worry about that, all right? Don't even worry about after hours time. You want to just trade right now during the day, okay? And so what do you want what should you have your chart set up as? You should be looking at, again, I like a 1 year, okay? A 1 year. And when I set it to 1 year daily right here, because I have 1 year selected and a 1D, that means each candle, all right? Each candlestick shows me 1 day's worth of price action. So this big red candle is saying that this is how the price moved during this 1 day. Down here at the bottom, you see the date, June 12th, 2019. This is how the price moved on July 12th, 2019. This one is for July 11th, 2019. And this one is for July 10th, 2019. Okay. And so I can change it to be different candles. So I have a daily, I can change it to a monthly. So then the candlesticks are a month's worth of time. Okay. So that's what you can do there. I like to look at daily candles and I like to look at a yearly time frame. Okay. Daily candles and a yearly time frame, right? You don't need anything that's a 5 minute, a 1 minute. At that point, you're getting into day trading and you don't want to do any of that. Okay. That's like having a whole nother full-time job. a whole nother full-time job, and we don't want that. We're trying to get rid of a full-time job, okay? We're trying to get rid of that. All right, so thumbs up. All right, what if the closing and highest price are the same for the day? Really great question. Really great question. If they are the same for the day, what you're going to end up seeing, and I'm going to see if I can find some on this chart here. I'm going to see if there's some on your worksheet, because then you can make a note. Here we go. Chart. Let me see if there's some on your, there isn't one. There's one that's really close. So I'm going to show you right here on the worksheet that you guys have. So right here on your worksheet, if you bring your attention over to, I would say this one's really close to it. Okay. So if this one's really close to it, I'm going to zoom in. So if your opening price and your closing price are the same, you're going to end up having like a little line. It would end up being like a black line. So right here, it does show a green body, but imagine this being like just a straight black line. Okay. That's going to represent. So if you see one that has wicks and it's just a straight line in the middle, there's really no body to it. That means your opening price and your closing price for that time period for that candle was exactly the same. Okay. And so that does happen from time to time. All right. But that's what it looks like and that's what it will mean. Very good question. All right. So next question is, can you see those day by day movement if you're looking at, let's say, 5 months ago? So you're going to see day to day movement, but you're going to see the day-to-day movement from 5 months ago. All right. So if you want to see some actual, like the candles are forming right now, you'd have to look at like what's happening on the market day right now today. Okay. But yes, you can scroll back to 5 months ago. You can do a year ago, 5 years ago, as you could see on the, across the top there on Yahoo Finance, but you can go back and look at 5 years ago, a year ago and stuff like that. But what matters right now for your buying, like, is it time for me to buy right now? You want to look at what is it doing right now, okay? And so I'm going to share my screen one more time because I want to get clear on what is it doing right now, okay? So the far right of your chart is what it's doing right now. So this was the end of the day. I'm going to go back to my 1 year. I'm going to scroll over. And I'm going to zoom in a little bit. Okay. So this over here is what it's doing right now. You see we have October to November, right? So we've got October 29th here. This is what it's doing right now. But if I scroll over to the left, keep scrolling. This is what it did back in March of 2019. This isn't going to help me as to whether is it good to buy right now today. Okay. What I want to be looking at is what is it doing right now? What is it doing right now? And is it getting ready to hit one of those ceiling points? You see this one? This is Johnson & Johnson. I'm going to zoom in. Johnson & Johnson, the candlesticks are starting to head up, right? You see they were up here. They came all the way down. Fish hit the water. They came back up. And now it's starting to hit that orange line. It's hit the orange line a couple of times and just hasn't been able to break through those 50 sharks, those 50 army men, or this ceiling here. It hasn't been able to break through yet, okay? So this wouldn't be a good time to buy just yet until you know that it's going to break through that orange line, okay? So that's what you want to be looking at, is what is going on right now. And right now is the far right side of your chart, okay? The far right side of your chart. Awesome. Next question we have is, does the Bollinger Band represent its usual highs and lows? Yes, so it does represent a usual high and low. So what the technical, if you're not technical, just don't listen for about 2 seconds. The Bollinger Band is taking the average of the highs and lows over the time period. Okay, so the top Bollinger Band is going to be the averages, right? And the bottom Bollinger Band is going to be the top is the high average, the average of the highest prices, and the bottom Bollinger Band is going to be about the average of the lowest prices. Okay, and so it's just giving you a gauge or boundary of about where the stock will tend to go the highest and where it will tend to go the lowest. And so that's why simple terms, we want to watch for our fish staying inside the water, or the fish will generally stay inside that water or that boundary. Okay. All right. So does the middle Bollinger Band have a meaning or purpose? Yes. So the middle Bollinger Band is just like the 50, the black line, the orange line, and the 200, the black line. Okay. It's just very little. So I think it's about 20 army men. Think of it about 20 sharks. And usually we hardly ever mention that middle one because the candlesticks usually just fly right through it, okay? But yes, it is a line just like the other ones as well. So you'll want to keep an eye on that too. Great question. And then what about if sharks break through and stay? What about the sharks? I think you mean the fish. So what if the fish break through and stay, like break through an orange line? So if they're heading up and they break through the orange line, your fish are now, that area, that orange line now becomes a floor or support to help push your stock price up. Okay. It's a floor to help push your stock price up. So right here on this one, if I can get it to zoom in here, on this one, the candlesticks are above the orange line, and that middle Bollinger Band that someone just asked about, it is now a floor to help push it back up. So you see it did kind of break through a little bit, but then it bounced back up here. All right. So that is what that is representing as well. Okay. So if it breaks through, it now becomes some support to help push it up. So support is when the lines are underneath the candlesticks. When the lines are underneath the candlesticks. Great question. Yes, if you're buying stock, support is when the lines are underneath your candlestick so that they can help push your candlestick up, okay? But with options, because we can make money when stocks go down, and we'll learn more about that tomorrow, the line can be above your candlestick and help push it down because you're going to make money when the stock price goes down, okay? All right. So it can go either way if you're trading options. If you're only trading stocks, then yes, you want your lines to be underneath your candlesticks to help push them up. All right. Next question was, do you have any tips for keeping your emotions and greed in check? Because I know it's easy to get caught up. Yes, that is going to be one of the hardest things to do. I can teach you the how to. Step 1, look for this. Step 2, look for that. It's going to be a matter of, are you going to be disciplined to follow the rules and like only buy when it's low and rising, sell when it hits that black line or that orange line, or it's hanging out of the water? That is where it's going to be the biggest. It is working on that. And so this is where I start talking about something that has nothing to do with stocks, but you have to work on, and I know in the academy that Tiffany has a session with Ash Cash, which is incredible if you haven't checked it out. But you want to start working on your money mindset, your mindset in general, and then addressing what is it that happened in my childhood or in my past that makes me apprehensive about my money? What makes me not trust myself with my money, right? What makes me not trust myself to sell when I know it's time to sell? Okay. Usually right in the beginning, it's because you're learning what all of this means. So you're not as confident. But once you get a understanding of that, this line means that. I see it hit the line and it started backing away. That's exactly what she told me it would do. When it starts hanging out of the Bollinger Band, out of the water, fish out of the water, it starts to come back in. You're like, that's what she told me to do. Like, I know, I understand this stuff now. After that, it becomes being okay with enough. All right. We live in a society where having a lot, having, tons of something means something. And that's not always the case. So making a lot of money in one trade, or thinking that you have to stay in and make a killing on one trade, is actually coming from a lack mindset. It's where you think that you're never going to have the opportunity to ever make this type of money again. So you have to make it all right now in this one trade, or you're never going to get a chance again. This market opens up every single day. It's been opening up every single day for I don't know how many years. This money is still there, you guys. It's going to still be there. So don't lose all that you have trying to make way too much in a trade, okay? There's a saying on, you can't, I can never get this right, but you can't bleed, you can't get blood out of a turnip, okay? Stocks are the same way. You can't get more out of it than it wants to give, okay? You can't want your stock to go higher if the fish is hanging outside that water. If it's hanging outside the Bollinger Band, it can't go much higher, okay? There's got to be something very significant that happens, some really good news or earnings, something like that that happens that really shoots it up. But then guess what? The fish is now hanging out in the water and it now has to come back in because it can't survive, okay? So just know that, like, don't come from a lack mindset thinking that you're never going to be able to make it again. A house is built one brick at a time. Your job is to make a brick, a $50 brick, an $80 brick, a $100 brick, a $1,000 brick in that one trade and keep it moving. Because again, it's not your money until it is off the table, okay? It's not your money until it's off the table. Once you've got it off the table, then you can start looking at another opportunity to buy, another time to buy. And then when you have that other time to buy, you get in, you get your brick of 50, 80, 100, and you keep it moving. It's about churning. Just keep churning. Keep making money off of these stocks and keep it moving, okay? Okay? That's what they do when they selling you lotion and bottles of water and cell phones that cost way too much, right? They're like, new phone, get them. Everybody get a phone. Everybody get a phone. Well, you know what? Every stock give me 50. Every stock give me 100, right? And then you keep moving to the next one. But don't try to make millions in one trade. Don't try to make more than what it's willing to give you. If you're willing to play that game, let the market give you what it's going to give you when it wants to give it to you. You'll win every day. Okay? You'll win every day. Now, I can't say you'll win every day, but you'll come out on top. Okay? All right. So that's what I would work on emotions and greed. One last thing for me, it was greed. Like, I was like, oh man, I was meant for this. Once I saw the potential I was making, I was like, I was meant for this. And then I would jump into another trade knowing I shouldn't have. I wouldn't check the rules. I wouldn't check the crowd. I wouldn't do anything. I would just buy because I was like, this is easy. And it would smack me down every time. The market is going to smack you down and take your money. I always say, like Debo taking your chain every time you don't want to play by the rules. Okay? And what I had to learn is, like, when I made a good amount of money and I felt that, like, excitement to do it again, it was time to turn off the computer. So I was like, okay, I'm feeling that way, Tila. Turn off the computer. You're done. Go enjoy what you just made and relax. And so that was something that I did for myself. So find ways to keep yourself disciplined. If you have a significant other, accountability partner, you can always check with each other, like, girl, I think I want to jump back in this, but I just got out of one. Your accountability partner or your significant other can tell you, look, you need to slow down. We got bricks to build, okay? All right. Okay, so last question is, what is the recommended time frame to watch on your chart? Is it daily or weekly when you're getting ready to sell? All right, so if you're watching, just pick one time frame and stick to it. You either want a weekly or a daily, okay? A weekly or a daily. And I'm going to share my screen one more time for the chart so I can show you what I mean by that, okay? And what I mean is, when you're up here either on Yahoo Finance or in your app, I have the 1 year, right? Because I want to be able to scroll back and see a year's worth of time. And we'll get into why on Thursday. But I want to be able to scroll back. But each candlestick, I want to see an interval meaning a 1 week or 1 month, okay? I want to see 1 week or 1 month is the type of candle that I want to see, all right? That means 1 week is this, each candle is worth 1 week of price movement. So this is how my stock price moved over 1 week's worth of time, all right? Then the daily means, there we go, daily. This is how my stock price moved over 1 day, over that day, okay? So you want a weekly or a daily. weekly or a daily. Which one do you pick? Depends on how high you want your blood pressure to be. Okay. These are both very calm charts because it's not day trading. And so weekly, I would say you can check less often. Okay. You can check less often. So if you know, oh, I'm only going to trade a couple times a month, go with a weekly chart. If you know, I'm probably going to want to trade a couple times a week, go with a daily chart, okay? Because it's going to let you know what's going on day to day. And a weekly chart is going to let you know what's going on from week to week, okay? All right, so that is what I would recommend. All right, you guys. So that is a stock chart. That's what those lines mean. We've got you started with a basic stock chart on Yahoo Finance. Linked in your worksheets is resources on being able to set up the same basic chart, videos on how to set it up in Thinkorswim, and I think there's a video also for Ally Invest on how to set it up. If you're working with an app outside of those, follow the same steps, the same settings and colors, and you'll be able to set up a basic chart as well. All right. So your homework for this evening is going to be to set up your chart. All right. Set up your chart and post it in the homework thread. Post it in the homework thread, and then share with us, you know, something that's happening right now where with your chart that you see. It's hanging out of the band here. It's hitting the orange ceiling here, or something like that. Okay. Maybe you don't know what it's telling you. Okay. If you don't know, but you got the chart set up, post that, and then we will help and chat and talk to you through what you're seeing on your chart. Okay. All right. Take your time. Rewatch this video as many times as you need over the next week and a half. Okay. Watch it as many times as you need over the next week and a half. I promise you, as you rewatch these videos, you're going to hear something different every time. Something different is going to click every time. Remember, it's like driving that car. Right now, you're like, okay, I just got my seatbelt on. I'm here. That's the best I can do right now. Tomorrow, it might be adjusting your mirrors. You're like, okay, I know what that orange line means. The next day, it might be putting it in the drive. You're like, okay, I know what the blue lines mean. Take your time and ask the questions that you need, because we're here to support you, okay? All right. Okay. Post your questions, post your charts, and we will see you guys inside of the Facebook group, all right? All right. Have a good evening.